Dr. Baba Saheb Ambedkar Open University.
Hello my dear student, welcome to Dr. Baba Saheb Ambedkar Open University Ahmedabad in the Chaitanya studio of Dr. Baba Saheb Ambedkar University. Today we discuss this subject called financial accounting. The financial accounting is very important in each and everywhere. Whether you are talking about the normal business, big scale business, small scale business, everywhere the financial accounting is important. That's why we are studying it. So first question in your mind, sir, what are the learning objectives? My dear friends, here we study the definition or define the financial accounting, the role and importance of financial accounting, the benefits and the limitations of financial accounting, the meaning of financial statements, the nature and limitations of the financial statement, how to prepare the financial statement, for example, profit and loss statement or profit and loss account and balance sheet, analysis of financial statement and ratio, that means we call it as a ratio analysis also, then the limitations of the analysis of financial statements. Now, the introduction about this block, the financial accounting. The financial accountancy or financial accounting is the field of accountancy concerned with the preparation of financial statements for decision maker such as a stockholder or stakeholders, suppliers, bank, employees, government agencies, owners and the other stakeholders also. The financial capital maintains can be measured in either the nominal monetary unit or unit of constant purchasing power. The word finance is very important. The central need of financial accounting is to reduce the various principal agent problems by measuring and monitoring the agent's performance and thereafter the reporting the result to interested users. So ultimately the financial accounting is a very important in any business unit. Now, what is financial accounting or financial accountancy? My dear friends, financial accountancy is used to prepare accounting or accountancy data for people outside the organization, not inside. Remember this word, outside the organization, or for those who are not involved in ordinary administration of the company. In short, we can say that financial accounting is the process of summarizing financial data which is taken from organization's accounting records and publishing it in the form of annual or quarterly or monthly reports for the benefit of people outside the organization. The financial accountancy is governed not only by the local standard but also by the international accounting standards also. So in a nutshell, we can conclude it with that the financial accountancy not only governed by the accounting standard of India issued by the ICAI, the Institute of Chartered Accountant of India, but it also by the international accounting standards. So I can say that the financial accountancy has the very wide scope. Now, what is the role of financial accounting? Financial accounting generates some key documents which includes the profit and loss statement or profit and loss account pertaining the method of the business trade for a specific period, and the balance sheet that provide a statement showing mode of trade in the business for a specific period. It records financial transaction as well as the events showing both the inflow and outflow of the money from sale, wage, etc. Financial accounting empowers the managers and aids them in managing more efficiently by preparing standard financial information which include monthly management report, tracing the cost and profit against the budgets prepared, and sales and investigation of the cost. So my dear friends, the role of financial accounting is also wide, as defined the scope is also wide. I can say in easy manner that financial accounting generate the key important or the key document for running a business, for estimation, for preparing a budget, for taking the decision. Now my dear friends, the importance of financial accounting. The financial accounting provide the legal information to stakeholders such as financial accounts in the form of trading account, profit and loss account, and balance sheet. Now dear friends, here I defined that the legal information. The legal information stated that the financial account must be recognized or the trading account, profit and loss, and balance sheet prepared as per the legal statute. That means any financial statement is defined and is prepared as per the rule of the law. Say for example, the company has to be prepared their financial statement as per the Companies Act 2013. Now it shows the mode of investment for a shareholders. Financial accounting as defined the financial statement in a different manner and in a precise manner for the stakeholder also, stockholder also, government also, employer also, employee also. So for that, it shows the mode of investment of for the shareholders. It provide the business trade credit for the supplier also. That means if you are doing any business, then definitely you have to concern with the supplier also, the customer also, etc. And while you are dealing with those people, then definitely the credit term must be used in that particular business unit. So that's why whenever you have the proper accounting method and proper financial statement and proper financial accounting, at that point of time it provides the business trade credit for the supplier also. Then it notifies the risk of loan in the business for banks and lenders. My dear friends, in this point we define that the bankers or a bank shall note down what are the credibility of your business according to your financial accounting or financial statements. On that basis, they define that whether they give you a loan or not and what are the risk factors involved in your business unit. They easily can justify or identify as per your financial statements. These are the key points or the key points of the importance of the financial accounting. Now, my dear friends, we move to the benefits of the financial accounting. Now, when we are talking about the benefits, then definitely it has to be done with some limitations also, like disadvantage, merits and demerits, etc. So, benefits of the accounting. The first statement or first point is maintaining systematic records. Now, my dear friends, here define that maintaining systematic records. That means you have to prepare daily ledgers also, trial balance also, then prepare a trading account also, profit and loss statement also, and balance sheet also. When you have the systematic record of your accounting, of your business trade, then definitely you achieve your goal and you estimate the future. Like it may happen or it may easily evaluate the budget also. Then it's meeting the legal requirements. My dear friends, when we are talking about the legal requirement, then financial account or financial statement is mandatory as per the Companies Act 2013. So ultimately, it's easily provided or easily met with the legal requirements. My dear friends, earlier we discussed that point, the financial account is governed not only to the local standards, but it's also get the approvals of the international accounting standard also and govern with them also. So my dear friends, it ultimately defines that it meet with the legal requirements. That means, say for example, if you calculate your depreciation, you provide a depreciation on your fixed assets, then which method of depreciation is evaluated or calculated on that particular fixed asset, it must be defined in particular accounting standard, and that you provide it and that you follow it. So ultimately, my dear friends, it required a legal requirements or legal system which can be the easily identified and it can be the easily justified in nature. And actually, when we are talking about the legal requirements and fulfill legal requirements, it make a very trust. It's a trustworthy. It helps to take a loan also from the bank or the any lenders. So this is also the one of the best benefit of financial accounting. Then it protecting and safeguarding business assets. Now the word protecting and safeguarding. First you have to protect your business asset, then you safeguard your business asset. When we are evaluate the fixed asset in appropriate manner, we charge the depreciation, etc., and when the repair cost and all these are additions with them, then definitely you justify your business asset in appropriate manner. So it's ultimate your benefit of the financial accounting that it protecting and safeguarding your business assets. Next is facilitating the rational decision making. While you are preparing your financial accounting in appropriate manner with the legal requirements, then definitely the decision making system is very easy and appropriate manner. So my dear friends, it's very important for the decision making also. Then communicating and reporting. While you prepare your financial accounting, say for example the trading account, P&L account and balance sheet, then after you have to communicate that reports communication and all the statutory reports which maintain to your director also, to your stakeholders also, to your shareholders also in general meetings. So it create the very good reputation in the market. So these are the benefits of the financial accounting. Next is limitations of financial accounting. Again, I said that when the benefits are there, then there is some limitations also there. The first limitation of the financial accounting is there is no clarity or not the clear idea of operating the efficiency. The person who works with you, whether in a good manner or efficient manner, there is no clear idea regarding it. So ultimately there is no clear idea of operating efficiency. Next is the weakness not spotted out by the collective results. That means, my dear friends, whatever the weaknesses in your financial accounting, whatever the omissions are there are a mistake on that, but there is not a clear and clarified or spotted out. Not helpful in a price fixation. That's why you referring the another aspect of accountancy, that is cost accountancy also. So here the biggest disadvantage or limitation is that you cannot fix the price according to only your the financial accounting. Then no classification of expenses and accounts. Some point of time the classification of expense and incomes are maybe not, I can say that unappropriate, but sometimes it are very differentiated. Then no data for the comparison and decision making. There is a differentiation. If your financial accounting, you define your financial accounting in appropriate manner and somehow it has taken the some basic or some point of the mistakes over there, then definitely your decision can be the ruled out. There is no control on cost also. Then no standard to assess the performance. What are the standards regarding it? There are no specified in the financial accounting. Then provides only the historical information. That means what does, then you refer it and do put it into the accounts and you define the profit and loss statement and balance sheet. It is not sufficient for taking the each and every decision in a company or any business unit. Then no analysis of losses. You calculate your profit, but ultimately you don't evaluate your losses in an efficient manner, or you analyze why the loss occurred in your company and what are the reasons for it. Then inadequate information for the reports. When you have not sufficient information for your accounting, then definitely it creates the wrong impression also, and that incomplete records also, and it directly affect to your reports also. Then there is no answer to certain questions. The accountant has no answer for that. That's why I take this limitation, that the no answer to certain questions. So my dear friends, these are the limitations of financial accounting. So while we are talking about the financial accounting, that what are the summarized question or what we studied into that particular financial accounting, with that the first and the basic is what is the financial accounting, why the financial accounting is important, what are the roles of that financial accounting, then advantages and disadvantages, that's the benefits also and the limitations also of the financial accounting. then we are deal with that importance of financial accounting. So these are the key aspects of financial accounting. So in this block or in this unit, my dear friends, we studied this. Now let's take an example or a case study. Mr. X running a business of motorcycle or a garage. They defined their accounting system by the daily basis. Say for example, if someone come to the shop and they I think they keep it up their a motorcycle or a vehicle over there for the repairing and maintaining also. So that particular person, Mr. X, define the what are the expense are the concern for that and what are the incomes over there. So he can easily identify what are the profits and what are the loss in particular repairing or the maintenance expense or maintaining services. But while they calculate or evaluate their performance of the monthly, then they evaluate that this is not sum up with it. This is not come up with it. So they have to defining some standards that they easily govern on it. And that's why the financial accounting is very much important in that. While we are talking about the legal requirements of the financial accounting, that definitely it covers the legislation concerning with the companies also and concerning with the financial accounting also. And for that, my dear friends, the financial statement must be prepared as per the Companies Act 2013 or any legal requirements as prescribed by the law. So in your mind there is a question, sir, we studied with that financial accounting, they prepare the financial statement, okay, done with it. But which type of financial statement including it? So my dear friends, there are majorly or mainly 3 financial statement over there, and on that you have to prepare your report also. First is profit and loss statement, balance sheet, and third is cash flow statement. My dear friends, in easy manner or in routine manner or in the day-to-day business manner, we are dealing with the only profit and loss statement and balance sheet. But in some of the big expanded or the big companies also prepare their cash flow statement also. And for taking the best decision or better decision, not just in an investment decision, but in price fixation also, to safeguard the reserves also, to preparing a budget also, whether it is for the monthly budget, quarterly budget or yearly budget or interim budget, whatever the budgets, purchase budget, sales budget, material requirement budget, production budget, whatever the reasons are there. At that point of time, you focusing on only and only that is your financial accounting. When your financial accounting is not appropriate, at that point of time you suffering, and then realize that financial accounting method is important in each and every business unit. So my dear friends, in the basic structure or in the basics of financial accounting is a very important in nature. It also collect the information as an internal basis, and it gives an appropriate method, or it gives the inappropriate measurement for the outside or external users also. So first question that in your mind, sir, when you are talking about the users, then what are the users of that financial accounting? So my dear friends, there are internal users also and external users also. Internal users are majorly for in the management system and define it, that is our employee also and all that. And in external we can say that the government also, the bankers also, the lenders also, sometimes it used for the researcher also. So these are the normal users for that financial accounting. So my dear friends, in this lecture we studied what? That the financial accounting first, then role of financial accounting, then importance of financial accounting, benefits and limitations. So this is all about today's session. You must refer the long questions also, short questions also and MCQs also. Thank you very much.